Good evening, ladies and gentlemen. And on behalf of HSBC Mutual Fund, I welcome you all to one more very intriguing and very engaging session with our investment specialists. It's been many quarters and many months that we have been doing these sessions with our revered and very, very significant partners in our business. And every month we try to pick on something new. Sometimes it is equity, sometimes it is fixed income, sometimes it is hybrid. Sometimes it is about a certain theme or a sector which is in flavor. But I think whatever we have done so far has always been confined to the geographical limits of our country. I don't recall having done this for the last 2 to 3 years now, doing a session where we have tried to or dared to venture outside of our country and pick upon certain economy or economies outside India. So I hope you've got the drift. So today's session is all about the world and the very captivating opportunity which awaits you and our investors, which has been building up outside India. We would be talking about certain very important economies. We would be talking about, or we would be rather sharing our insights on certain very, very promising and enterprising economies and countries, where it's not only about the equity market returns, but it's also to do with the developments which are happening, both from a geopolitical stability perspective, from a stable, from a weak to a stable economy perspective, as well as from a lot of things which are happening through demographics, which are favorable through consumption and many other favorable factors, including infrastructure development. So yes, there is a big world, a very, very attractive world outside India, which is very lucrative right now. And we will talk about those opportunities today. Let me filter it down to what we call emerging markets. So emerging markets is a fascinating story. I think it is almost 20 years or 15, 20 years when the term BRICS was coined, and of course Brazil, Russia, India, China, and then obviously South Africa came in, and BRICS was a very interesting chapter which heralded the entry of emerging markets as a viable investment destination for not only Indians but many other people in the world. Uh, but a lot of us feel that emerging markets is BRICS and BRICS is emerging markets. This is a session which will talk to you about a lot of other facets of emerging markets. So emerging markets is not a homogeneous entity. Emerging markets is made up of 15, 20, 30, 40 different stable economies and stable governments. And the MSCI Emerging Market Index is one which kind of symbolizes and incorporates all those companies, all those stocks which are belonging to these emerging economies. So yes, it's a fabulous world. It's a fantastic world. But why are we talking about emerging markets now? I don't want to steal my speaker's thunder because that is what he's going to talk about. But just to give you some perspective, there are asset classes which have done very well this year for our investors, for your investors, and there are asset classes which have disappointed in 2025. Yeah. So if I can count those asset classes which have done relatively better, uh, the government bonds and debt markets in India have given an average return. You have commodities like gold and silver, which have given returns which they have not given since 1979 or 1980. These are the kind of returns which they have given, and these kind of returns usually come in a cumulative period of maybe 5 to 10 years, which a lot of our investors have seen in 1 year. But that's about commodities. There has been a disappointment when it comes to Indian equity markets, whether it's the broader indices, whether it's the narrow indices. Investors have been found wanting because we have not got those kind of returns which we are used to, thanks to high valuations and slightly not so great geopolitical and global environment around us. Okay, so once again, where does emerging market fit in? So emerging markets has found its own place after almost a lackluster 4 year, 5 year, 6 year period, a lackadaisical period of 5 to 6 years. We suddenly see emerging markets shining bright. They have been the second most rewarding asset class in 2026 after gold. And if you think that we are only going to talk theory in this, let me correct you. There is an opportunity right with the HSBC Mutual Fund basket of funds, wherein actually you and your investors can participate and take part in emerging markets. So, with this background, let me welcome to this webinar our my colleague and friend Asheesh Mehrotra. Ashish, welcome to this call. And before you start off, let me give a brief introduction about Ashish to all our partners who have logged into this call. Okay, so Ashish has been a part of the mutual fund landscape. When I say landscape, he's worked with the regulator, he's worked with asset management companies, he's worked with a securities company, and he's a seasoned professional with more than 15 years of experience. Ashish is also a CFA charter holder from CFA Institute USA. With HSBC Mutual Fund, Ashish has been there for almost since 2018. So this is his seventh year. And he right now he leads a very important role in the product team of HSBC Mutual Fund. Prior to his current role in HSBC Mutual Fund, Ashish was with SEBI, the Securities Exchange Board of India. He has also worked as an equity research analyst with Ventura Securities Limited in the early part of his career. In addition to the CFA charter that he holds, he is also an MBA in banking and finance from the University of Pune. So, welcome, Ashish, and we are very pleased to have you and talk about global emerging markets and some other opportunities that herald us.
Um, sure, sure.
Yeah,
Thanks,
Ashish.
Rajat. Thank you very much for the introduction, and I welcome everyone on this call. Our partners, our colleagues who have been, listening to various events which we have been doing, various webinars which we have been doing for you know, uh, for last number of months. Obviously, like Rajat said, that we have heard a lot about our own country, and we know where the long-term structural story is there. But it's time to actually maybe listen to other things also which are happening in the world, and try to realign your investments accordingly so that you don't miss out on those opportunities which are there across the world. So obviously India is one of the long-term structural story which remains intact, but if you see that there are other countries as well in the world which are doing well, and none of us would want to miss out on those opportunities. So having said that, before I even start my presentation, so Rajat, like you said, the first thing which you said mentioned was we should look at various countries and various asset classes as such which investors look at. So in terms of that, one of the very important things which I just want to highlight before even I go to my presentation is with respect to the correlation. Now that's a very very simple word which is there, but if you see the correlation, what it specifically means that the relation between various assets and how they behave. So if you see, for example, the relationship between gold and equities, it's negative. Whenever there is a rise in the equities, there is a fall in gold, and vice versa. Generally, typically, it happens that way. So I'm not saying that that this correlation will hold always, but these are the kind of things which we should be looking after. Now, in that sense, your portfolio should be, made in such a way that there are asset classes or there are asset exposures to your in your portfolio, so that the correlation is there is a difference in the correlation in which your asset classes are in the portfolio. So, in that sense, if you see there are a couple of funds which are on offer with HSBC. Those two funds which I'm going to talk about, which are very interesting ones, which we have seen. And we have been part of that journey for a very long time now. And one of those funds is global emerging markets. So now you see why I'm talking about the word correlation before even introducing our fund, is that in terms of the emerging markets which we have, there is a difference in the correlation between various countries. So, if, for example, if I talk about correlation between India and the emerging markets as such, is around 0.6, 0.7. So that's a small number. So it's not exactly one-to-one correlation. So there is a difference there. So for example, if India performs well, there is a chance that emerging markets as a whole, as a bunch, may be relatively lesser performing, and vice versa. So therein the correlation lies. And similarly, we have other emerging countries as well, which are, for example, Brazil is there, for example, Mexico, Turkey, Korea is there, Taiwan is there, which have performed relatively very well in this year. So that's where I wanted to introduce this terminology of the correlation before even I continue with the presentation. And with this, I would want to introduce the fund, which is the Global Emerging Markets Fund, for which I'm going to talk about first. And then I'll proceed towards the Brazil fund, and give you an overview of what the fund is all about, how you can invest into it, what is the positioning of the fund. So effectively, this is a feeder fund which we have, which invests into an underlying fund, and more details later in the
Ashish,
presentation. So I'll just
yeah,
pull up
Ashish,
that.
meanwhile, I'll give you some time to, share your presentation, which you have prepared for our partners. But just a small request to all our partners who've logged in. There is a Q&A tab on the Zoom webinar. Please feel free to ask your questions, type your questions. We will have some time in the end after Ashish and I have stopped talking, and I will pick up your questions, and between me and Ashish, we'll try to answer all of them. Yeah. So let's do that. Ashish, you can start sharing your presentation. I think it's a great way of introducing the concept of diversification and asset allocation by using the pivot of correlation. Let me just start by asking you, and we'll do this in a very conversational form.
Sure.
Emerging markets have outperformed global and Indian equities in the last 1 year. So your thoughts on why this has been happening? Because this usually we see that India has been always been ahead of the pack, and India, China lead the returns, and everybody else follows. And why should one look at emerging markets today? What is the relevance of this time period vis-a-vis investing in emerging markets? If you can start by answering this question.
Is visible in full screen format.
Yes, yes, we can see your PPT,
Okay, great.
Ashish.
Thank you, Rajat, for that. So okay, and now you see, I have given this word correlation in red on top of the presentation. That's the reason wherein I wanted to introduce that first before even going into the concept of emerging markets, those equities, and the country-wise allocation which are there in our global emerging markets
Hmm.
fund, and proceeding further. But having said that, like you said, that why emerging. So if you see that in terms of the emerging markets, there are very, very few important trends which I want to discuss today about. Is one of them is energy transition, and another is digitalization. Now, digitalization, all of us would be able to relate it very quickly in terms of what we see in India as well, and what we have been hearing and using it now. So if you see the UPIs, whatever is there in India, and in terms of other countries as well, if we go to Taiwan, to go to Korea, those are the kind of emerging markets. To go to China, the kind of digitalization which is happening there, the kind of companies which are there, which have been into this space, is really a thing to watch out for. Now, where I'm coming from is that there is a lot of disruption which has happened in this space. And why I'm saying this is, if you see AI. So, for example, if you look at our own
Hmm.
habits, earlier all of us generally used to just go to a particular search engine, type out the name of the search engine, and used to do search over there. But right now, what we do is we just open couple of AI GPTs which are there, and then we go there and type our queries and quickly get an answer. So these are the kind of changes which are happening, which is a leapfrog from what we used to be earlier and what we are now earlier. That's just one very basic example of what is happening in the digital transformation. And then when we come to fintech space, that's a huge jump which we have taken from how we used to bank earlier versus what we now do earlier. There are companies, for example, there are companies in Korea and Taiwan who are doing semiconductor manufacturing, and we have been seeing the growth and rise of those companies a lot, in terms of the advanced chips which they are manufacturing, in terms of the technological advancement which they are doing. So you don't want to miss out on those
Understood.
things, because it actually starts pitching that it actually starts by in catching those companies early, investing in those, and then riding those companies and getting those returns for the investors.
Hmm.
So these are the in terms of the digitalization, that's what I told you. In terms of the energy transition, what we have seen that there's a lot of energy which is going to be used. So we have transformation and sorry the transmission and distribution companies are there. There are companies which are going into clean energy. There are companies which are going into windmills. Those kind of companies are there which are trying to disrupt the entire business market. So those are the kind of companies which are there into emerging markets. And we are in fact our investors would not want to lose out on those opportunities by missing out there or not investing there. And hence we should look at investing in emerging markets
Understood.
equities. Yeah. So if I go to my next slide, which says that why we want to
Yes.
invest into emerging market equities now. Okay, this actually brings me to one of the things which generally people talk about is the equity valuations which are there. So in terms of the valuations, if you see the bottom right chart which is there on your screen, the emerging market equity valuations have been on a very, very significant discount to US equities. Now, this makes them a very, very compelling buy. I would want to always go ahead and try to invest into a very cheap market in terms of valuation. So just to give you an example, the Brazil market, the Brazil market, the index there, it's the Brazil market itself. The valuation of that is the PE of that is around 8 to 9 times versus other countries wherein the PEs are way higher than that. So this gives us a view that there are valuations which are far cheaper in terms of compared to US, as well as in terms of comparison to other markets as well. Now there have been record low allocations to emerging equities by global investors as well. If you see the bottom left hand side chart which is there, and it clearly shows that there have been most underweight in the emerging market equities for a decade now. And there have been reasons for it, like people have been investing into US because of the stronger dollar there. And they were getting returns as well. But for the last 1.5 2 years, the dollar has been weakening a lot. There have been compelling reasons for it. There has been Fed rate cuts for it, and obviously I'll talk about it. But that's the reason the global investors have been most underweight. In terms of the earnings revisions, the EM equities generally perform best when there is, the corporate earnings surpasses the developed markets, and that we have been seeing now. If you see the companies which are there in Taiwan, which are there in Korea, in terms of the manufacturing of semiconductor chips, in terms of the manufacturing itself, in India, in China, in Brazil, we have been seeing a turnaround in the corporate earnings. So therein we see that the earnings revisions will actually help these companies outperform, and hence we should be having an investment there. And obviously, like I talked about the weaker US dollar, the forex gains obviously will help you in compounding those returns.
Very well articulated, Ashish. And I think if you stay on this slide, one summarization from my perspective would be look at the triangle, and the
Sure.
triangle is that less maybe around 5% of the global portfolio flows come into emerging markets. That's the underweight which we've had, and this is a historical issue. It's a systemic issue, like you mentioned. Most of the flows go to US and some other limited countries. At the same time, 80 more than 80% of the growth, global growth, happens in these emerging markets. So look at the dichotomy of things. So I think people are realizing this, and the other part is the valuation. So I was reading somewhere that you talked about Brazil, but if you look at emerging markets as a pack, the MSCI emerging markets, I think from a forward P perspective, is trading at maybe around 13 to 14 times. And if you look at
Yes.
many other developed markets, they are trading upwards of 22, 23, including US. So this is the triangle that we have. Moving on to the next question is there are many interesting economies, there are many interesting countries. I know we don't have time and mind space right now to talk about all of them, but Ashish, can we request you for a helicopter view on some of the key economies and maybe a few lines about, a few statements about how those economies are looking like now and under the emerging market umbrella?
Right. Sure, Rajat. Okay. So, in fact, interestingly, my next slide is on that only regarding the country
Yeah.
views, which is there because obviously, like I said, that coming back to my first word, which I introduced, the correlation. We need to look at these countries not in isolation but in correlation to each other, and then try to see that where the investments could be done, so that I am best placed. My portfolio is best placed there, but rather than investing individually in each of the countries, what you will do is you will try to take an exposure through a emerging markets fund, which automatically has an exposure to all of these countries, plus
Sure.
there are some more countries. So like you said, that we can't cover all the countries in this time
No.
period, but I will try to cover a couple of them, which I've been talking about. So one of them first is basically, let's go to South Korea first. And we have seen that there is a new president and who is committed to corporate reform there, and there is a value creation. And obviously, if you see the kind of AI development and advancement which has happened there, which is very good for South Korea. And in fact, this year YTD returns, if you see, South Korea has, it's around 93%. So those are the kind of returns which South Korea has given. And it's not on the basis of the valuations which are very high. So there have been attractive valuations at reasonable prices. So we'll obviously try to go to that country as well for the investment. So South Korea is looking reasonably well enough buy for our GEM fund. Similarly, if we go to China, now China, there has been a comeback, there's been a turnaround, which we have seen from the fiasco of one of the very big real estate developer which happened there. From the COVID, they have turned around. So there have been multiple stimulation levers which the government of China itself has, and in fact, obviously, like I said, the government of China itself has tried to push companies to start manufacturing, to for their revival. They have done a lot of things, so we need to look at those things. There have been very, very rapid technological innovation, and like I said, there have been many AI GPTs, and the China's GPT has been one of the very successful ones. And then that GPT is doing things at a fraction of the cost of other major GPTs which are there in the market. So those are the kind of things which are happening, but there are certain concerns which are there. Obviously, the tariff issues
Yeah.
which are like, what will Donald Trump tell you, come up and say today morning? You don't know, I don't know. So those things can happen there, and hence those are the issues which are evident and which are prevalent in case of China, in China, India, Brazil, South Africa. Those are the countries which are there, which are primarily there. Obviously, coming to our own country, India, we have been among the fastest growing emerging market economies, around 7% GDP growth. There has been a lot of private sector participation which is happening, and we have seen a lot of IPOs
Mm.
coming here. So we might not see a lot of secondary market activity happening, but
Yeah.
are seeing a lot of primary market activity happening, which is happening there. And on top of that, we see that the companies are creating value for the shareholders and their investors. It's not that we have a very, very small company which gets listed and there's no value creation. So we have seen in the past 1.5, 2 years, there has been a lot of value creation for the investors. And the expectation, the earnings expectation going forward is in double digits, is in teens.
Mm.
So we expect India also to grow on a much a faster way than it was
Yeah.
earlier. Coming to Saudi Arabia, there have been concerns slightly. So there's a higher elevated market valuation, which is below average. So we might have a slightly lesser allocation there. South Africa is obviously one of the other markets which we are looking right now. So there is a reform focus there. It's obviously a beneficiary of weak US dollar. It's a commodity based market, under owned, undervalued. So we might have a higher allocation. And lastly, I come to Brazil. Obviously, there is a dedicated fund which we have, which I'll talk about in
Yeah.
for Brazil, and it's primarily beneficiary of a weaker US dollar. And we have been seeing that in terms of the tariffs overhang, there have been talks, and we have seen the results of what the US Supreme Court said regarding the tariffs on Brazil. So those are the things which are there, which have made Brazil a very attractive market here. The rate cycle has peaked. it's there is a very strong commodity prices which are there, and the valuation obviously is attractive. Like I mentioned earlier, the P is around 9, 8 to 9 versus other couple of markets. So and obviously, like you said, in terms of the emerging markets, PE of around 13, 14. So Brazil as a standalone market also looks very attractive.
Absolutely.
So that's why, I think that these are the kind of views
Yes.
which we have on the emerging market equities.
Some of the key country views
Yes.
that we
Yeah.
cover. And this is from HSBC Asset Management Global, ladies and gentlemen. So, these are not our individual views or what Ashish has read in the papers in the morning. We are representing our house view, which come in from our global fund managers. Ashish, one interesting fact which I want to share with you, which I was listening to, and this is again from one of our fund managers internationally who manage the emerging market fund. You talked about China and the AI story there.
Yeah.
Okay, and the interesting factor is that yes, there have been IPOs in India, but yes, there have also been IPOs in China. The difference is that in China, there are more than 140 IPOs this year.
Mhm.
Some of them have happened, some of them are coming up, where the underlying is an AI model building company, right? A GPT or whatever. So just imagine, and in India, I don't think we have even one. So this is taking you back to the first slide where you said, why should one look at other economies and not only India? Because
Yeah.
the bus is becoming a train and a plane and is just leaving the station in other countries when it comes to AI and many other technologies, right? So thank
Yeah.
you for this.
Sure.
Ashish, let's move on to the Global Emerging Market Fund and quickly, if in a few points you can cover. So ladies and gentlemen, like Ashish mentioned, we have an HSBC Global Emerging Market Fund. Which is run out of Luxembourg, and the fund has had a feeder in India. We are allowed to launch feeders with certain restrictions from the regulator. So we had launched a feeder way back in 2008, 2009. It's called the HSBC Global Emerging Market Fund of Fund. So if you or your investors want to invest into the parent fund, then this fund, as of now, as we speak, is available to invest. So Ashish, talking about this fund, you've gone through that and you've communicated with the parent fund management team as well. This looks like an interesting option to capture the entire emerging market opportunity. Can you share, in a brief manner, the portfolio strategy and the fund manager's approach in running this fund?
Sure, sure, Rajat. Sure. So, okay, just a brief background on what this fund is. Like you have already said that this was launched way back in 2008, and this is a fund of fund which invests into the underlying fund, which is HSBC Global Investment Funds, Global Emerging Markets Equity, which is based out of Luxembourg. That's the underlying fund for this one because it's a fund of fund which is there with us. Currently with the size of around 265 crores. And coming to your question on the investment process and portfolio allocation, so there's a very interesting
Hmm.
thing which I have seen and which I talk to the fund managers around. So it's a bottom up approach which is there. So
Okay.
it's not exactly I will decide a country allocation of I'm going to invest into India, let's say at 20%, I'm going to invest into China 10%, I'm going to invest into Brazil, that's 15%. So it doesn't go so on and so forth. It doesn't go like that. It's a bottom up approach which we follow. And what we do is we see those mega trends which are there,
Hmm.
and try to identify which companies are going to benefit from those mega trends, and then which are the companies which are eligible in terms of the parameters which we have, valuations, the governance, the financials which are there, what is the forward earnings which are there, and how does the outlook look. So what we try to do is there's a particular theme identification which we do. Then we have those mega trends, and then what we do is we do a fundamental research. We have a proprietary financial modeling, the assessment, like I said, in terms of the if there's a long-term investment case for a company. Because if you see there's a mega trend, it just can't happen overnight. So I can't have, like you said, that if in China there have been 140 companies related to AI and GPTs which had come up with the IPOs. So, those 140 companies would not have, come up overnight, right?
Yeah.
So they would
Yeah.
have started development like 7, 8 years back, and then, they have reached to this stage. So what we do is we look at the long-term investment case for a company, and then, try to identify those companies with the help of the research which we have. And then, we construct the portfolio. So the stock
Okay.
selection has to be on the basis of the parameters, like I said, the valuations which is there. There should be a good governance practice, the ESG factors which we as in the underlying fund manager looks on. They also look at what is the promoter doing. Those companies should be in the business, and those are the kind of things which we look at before identification and the construction of the portfolio. After we do that, then there is a monitoring of the portfolio, which is obviously complemented by the rigorous governance processes which we do, so that we are not caught unaware, and we are not caught blinded by anything which is happening there. And obviously, after that, there is an active ownership. We keep on engaging with the companies to drive better outcomes. We obviously, if there's a holding in the company, we obviously would go ahead and try to identify if there are any issues. We'll talk to the distributors which are there of those companies, the research team, and those are the kind of
Hmm.
research which we do, so that there is a quick engagement which goes on with the company, so that there's a active ownership which we take, and this also helps us in the decisions which the company takes, and we putting our inputs there. Coming to the next piece of the thematic idea generation which is there, and obviously we look at those companies, or we look at the portfolio construction factors which are relevant to the fund objective, right? And then if there are any valuation anomalies, for example, if the PE of a company is way higher than what should be in the sector, or what should be, for example, a median P, so we'll try to see if there are factors which are related to those high Ps or high valuations which have been given there, and what are the reasons for it. So it's not that we'll just reject those
Yeah.
companies. We'll look at those
Correct.
factors. Like I said, that we will align those companies with the mega trends, and it's a bottom up
Hmm.
approach. So in the various countries, we'll identify what are the mega trends which are going on in those countries. So for example, there can be a trend of manufacturing and infrastructure going on in India versus a trend of fintech which can go on in Brazil, because in terms of Brazil, if you see, the fintech is not as developed as what is in India, for example. So there is a huge opportunity there. So we'll try to look at those companies, and then obviously there are other filters, like what is the transformation which is happening. Are there any tactical calls which we want to take? And then we have identified an investment universe of around 1,300 companies, wherein we put in those exclusions which are not in our parameters, and then we see
Yeah.
that there is a liquidity restriction, etc., and hence we come out with the certain candidates which are approximately
Yeah.
200 for the fundamental research, out of which we try to invest those in the fund. So
Yes.
those are the kind of things
Yeah.
which we take. So this slide basically sums up
The
what I
themes. The
explained
themes.
in the
Yeah.
previous two slides. Um,
Yeah.
yeah,
So these are the
yeah, that's
themes. These are the underlying themes in the fund. We've already spoken
right.
about that. And Ashish,
Yes.
that funnel is very interesting. So I think what you showed there is that the entire universe is basically the MSCI Morgan Stanley Composite Index of emerging markets is more than 1,300 stocks. So that is your universe, and I think there are more than 15, 20 countries which are, or maybe much more than that, which are represented there. So out of the 1,300, the HSBC Global Emerging Market Investment Team actually filters and funnels basis all this criteria about 200 candidates for fundamental research, and out of that I know that the fund is right now running around
Yeah.
45 to 50 stocks. So just imagine the kind of research and the kind of in-depth analysis which
Yeah.
goes in by all the analysts and all the fund managers, and there are more than so I think this is a very highly researched product offering that we offer. Thanks for this, Ashish. Let's quickly move on to the portfolio. Can you show us the portfolio of this fund? I have a few questions there, and this is the current portfolio, Ashish.
Right.
So, what I want to understand from you,
Yeah.
and we would want to share that with our partners, is, if you look at, there are so many countries, there are so many stocks. You just mentioned about 1,300 companies as a universe in emerging markets. So, what is the current sectoral allocation in the fund? And you mentioned that country is not, it's not a top down approach, it's a bottom up approach, but people would want to know what countries are we representing in this fund and to what extent.
Right. Sure, Rajat. So this slide actually sums up a lot on the
Hmm.
what is the portfolio and before that, just for a few seconds, I would want to show the previous slide, which is this one. Manner. If you see the left hand side, this chart of style, industry, country, and stock specific, you will see that in terms of the stock specific bar, which is way higher, right? So that's what I was trying to explain earlier, that there is the style of the fund manager is to pick up the stocks bottom up approach. So this chart actually sums up that the country specific factor, if you
Very
see,
small.
we it's very
Very
low.
small.
So
Yeah.
they try to do the stock picking
Hmm.
in terms of bottom up approach, and that's where the returns
Correct.
maximization come
Correct.
from, right? So coming to the portfolio
Hmm.
which is
Hmm.
there, yeah.
Yeah.
So if you see the portfolio of the underlying fund, we have China, whose allocation is 32%. We have Taiwan, wherein it's 18%. India is 14%. Korea 12%. South Africa 9%. Brazil 5%, and so on and so
Yeah.
forth. These are the kind of allocations. So there's a marginal amount of cash as well, which is kept because of
That's
the
okay.
redemption
Yeah.
requirements which we have. And in the countries itself, if we talk about the sectoral allocation, the IT allocation is higher now, which is 33%. Financials is 21, discretionary, consumer 15 and a half, and communication services 15. So obviously it's on the screen in the descending order of sectoral
Hmm.
allocation. And in terms of the portfolio allocation, if you see the TSMC, which is Taiwan Semiconductor Company Limited, like I was saying, that the companies wherein we see that there is a mega trend, and for example, TSMC, which is Taiwan Semiconductor Manufacturing Company, is one of those companies which is an output of the mega trend of chips manufacturing, which is there. Tencent Holdings is one of the holdings which is there, which is a huge company in China. And
Yeah.
Alibaba, obviously, all
I
of
think
us know
Tencent
about Alibaba.
Tencent is the
Yeah.
largest gaming and internet company in the world. Forget China or Asia.
Yes, yes, yeah, right, Rajat. So these are the kind of companies for from China, which is there, from
Sure.
Taiwan, which is there. And if we come to, for example, in India, we have, in terms of the financials, which you see,
Hmm.
HDFC Bank
Hmm.
is there. Shriram Finance is there in India, which is around 2.2%. HDFC Bank 2.6%. So it's a classic mix of sectors which are there. We don't want to lose out on things, and simultaneously we don't want to be very very concentrated into a particular sector.
Yeah.
We keep on rotating the sector as per the the trends which we identify, as per the
Hmm.
companies which are there. So the sector allocation and the region allocation is an outcome of the portfolio
Yeah.
selection, not the other way around,
That's
because
right.
that's the bottom up approach which we follow.
And one interesting observation here, because like you, I have also been following this particular fund of fund for the last 4 to 5 months, Ashish. The fund managers who are based out of London, the investment team is based out of London, and we are only a feeder fund there. I think they've been doing a very dynamic allocation and reallocation of countries and sectors. For example, I'm right now seeing India as a 13.7% exposure. I remember 2 months back, this was almost 16 to 17%. Yeah. China was about 27, 28%. 3, 4 months
Right.
back, it has gone up to 31, 32% now. So I think this
Yeah.
also shows that the fund managers are managing this dynamically, and they're very agile. They are not fixated to an index or a very passive kind of an allocation. Yeah.
Correct. Correct. Right. Right,
Great,
Rajat.
great. So let's move on. Thank you, Ashish, for spending so much time on emerging markets and emerging markets on a fund. As a fund, which we have, the HSBC Global Emerging Market. Our partners have also been very, very enthusiastic about one more country, which has been evincing a lot of interest. It has generated returns, and it has also, the equity market has also, received a lot of flows in this year,
Yeah.
and that is the country of Brazil. Yeah. So and coincidentally, HSBC also has a Brazil fund, and we like the Global Emerging Market Fund. We already have a feeder fund called the HSBC Brazil Fund of Fund, which is feeding into the mother fund. Like the Global Emerging Market Fund, this is also based out of Luxembourg. It is managed by our fund managers based out of London. So, Ashish, maybe we have some questions coming in from the audience. So maybe you can take a few minutes and take
Yeah.
our partners through what the economy Brazil stands for, which are those highlights about Brazil, and how is the fund structure?
Sure, sure, Rajat. So yeah, like you said, that coincidentally, we have a Brazil fund. And if you see, Brazil has obviously Brazil is synonymous with football, but I'm not here going to talk about football. Let's talk about their strong performance, which has happened in 2025. It really outperformed the MSCI Emerging Markets Index, and there are a couple of reasons for it. So, like the reasons which you see here in bold, it has the weaker dollar has actually helped it a lot. Fed rate cutting outlook, has meant a better external environment, especially for emerging markets as a whole. It's not Brazil, but Brazil has benefited a lot from that. In fact, there's been a tailwind. We are seeing that the inflation cycle will ease out. We also envisage that there will be a rate cut. And the interest rates in Brazil are way higher, around 12-13%, which we have been seeing now. So we envisage that there will be a rate cut in Brazil as well in
Yeah.
2026 going forward. And those are the kind of reasons which are there for growth of the Brazil market. It has been really trading at attractive valuations, like I said, and I've repeated this once or twice already in the during the presentation. Its PE is around 9, and which is versus other, in fact, emerging markets and rest of the world. And the emerging markets MSCI PE is around 13, 14. In fact, India Nifty 50 PE is around 20, 21 forward. So those are the kind of valuations which are there. It's really, really
Mm.
attractive, and hence which has evinced in a lot of interest from the global investors as well, which obviously want to diversify away from the US exceptionalism. So I will, also an interesting thing which I want to tell about is that there are elections which are going to happen 2026, and obviously there is a marginal risk which is there in terms of the volatility which might come. But whatever be the scenario, the relatively Brazil market really looks attractive, and there are high real rates, like I said, 12 to 13%, which is there. And if there is a easing cycle, the cooling of the inflation which begins, the dollar is already weakening, and obviously those are the pointers which actually make a case very good for a re-rating of Brazil. And if it happens, so the performance which we have seen in the past might potentially continue going forward. So I believe Brazil has been a really good market to invest into. In terms of the tariffs as well, it really runs a surplus with US, and it's quite small. But the news flows in such a way that the US tariffs will impact all the markets. But Brazil has not been a very on the receiving end of tariffs with US. In fact, the last decision in the US to reverse the tariffs, obviously the Donald Trump government is challenging that. But apart from that, we don't expect, as in the and obviously it's the house view of asset managers sitting there in London. So we don't expect the very negative impact in terms of the tariffs. And we obviously, like I said, we expect the earnings to be growth to be around 15%. Softening inflation obviously is one of those key criteria for that. Kind of
Ashish, Ashish,
Brazil
just want to,
update which we have.
yeah,
Yeah.
just want to pause you here. Just to be mindful of both
I
the
didn't get
funds.
that. Could you try again?
Sorry. Yeah.
Yeah, sorry. I was saying that if you look at both the funds, the emerging market fund and the Brazil fund, I think we should be aware and we should make our partners aware of the risks as well. So everything looks
Yeah.
glossy and rosy in 2025, but there have been bad patches and patches of underperformance and negative returns if you go back 5 years, 10 years, 15 years in both these funds. So uh, I would say that both have their positives. They need to be a part of every portfolio from a diversification perspective because of the fact that you talked about the negative or the poor correlation with India. But I think one has to be mindful that in Brazil, if people are investing, then there is a country risk. In emerging
Yeah.
markets, it's pretty diversified because Ashish showed you that there are more than 13, 14 regions that you're investing in. So one has to be mindful. The second very important risk factor, Ashish, which you mentioned, is that Brazil is going into elections. We have seen election years in Brazil very, very turbulent, very volatile. So if somebody is investing into these kind of funds, please accept volatility as your friend is going to continue as
Yeah.
long as these events don't pass. So that's a very important point which I wanted to share with you. And Ashish, one more thing about Brazil as an economy is that we have seen this transition. I remember when we had launched the feeder fund in 2011, 2012, that phase, Brazil was a kind of a proxy to investing into commodities, both hard and soft commodities.
Correct.
Brazil was known for coffee, Brazil was known for steel, Brazil was known for petrol and oil, petroleum and oil. Now, if you look at the kind of stocks we have in the Brazil fund as well as in the emerging market fund from a Brazil perspective, it's
Yeah.
all changing to cloud computing, quick commerce, consumption, and AI. So the times are changing, and so are the sectors and opportunities. But I don't want to
Yeah.
talk too much about it. So you can show us a little bit about the portfolio
Sure.
and the sectors of the Brazil fund now.
Yeah, sure. So these are the kind of sectors
Hmm.
which we have, Rajat. So, like you said, so financials is there,
Yeah.
materials is there, energy, consumer staples, discretionary. So, if you see, it's again a diversified mix of the sectors, not like overly weighing very high into a particular sector. And in fact, in terms of the stocks, also, if you see, not overly higher allocation into one of these stocks. So, these are the kind of stocks and sectors which you have. So, there's a petroleum company which is
Yeah.
there. There is a bank which is there. There's a company which is a play on the
Hmm.
digitalization. There's a company which is a play on the consumer. So there's a company which is play on airline manufacturing. So Embraer
Yeah.
is
Yeah.
one of the companies which manufactures planes. So we have an exposure there as well. So these are the kind of diversified exposures which we take into Brazil. Obviously, like Rajat, you have mentioned that there is a country risk, so investors
Yeah.
obviously should be aware of that. But in terms of going inside the country and then trying to manage that risk in for manage that risk through diversification is one of the things which our fund managers try to do, and that's an outcome of that which you see on your screen right now.
Yeah, lovely. And let me tell our
So
audience viewers that both these funds, the Global Emerging Market Fund and the Brazil Fund, they have been evincing a lot of interest from your investors and investors in general. One has to be mindful that there are limits stipulated by the regulators on our international fund of funds. And some of those limits will get exhausted very soon. Ashish, I see you have another slide on the positioning of the fund, overweight, underweight. So quickly, if you can
yeah,
cover
yeah.
this, and we'll take the audience questions after
Yeah,
this.
sure, Rajat. So I'm mindful of the timing as well of the webinar, but in terms of the relative sector weight, if you see, and top absolute holdings also, if you see, like I was showing earlier, so these are the relative sector weights which are there, and in terms of the sectors which are overweight with the MSCI Brazil index, if you see, there's consumer discretionary, there's IT, there's healthcare. We are slightly underweight on financials, industrials,
Yeah,
consumer staples, energy, and
yeah.
utilities there. These are the kind of relative sector weights which are
Excellent,
there.
excellent.
Yeah.
Okay,
So
so Ashish,
that brings me to the
yeah,
end. Yeah.
thank you
Yes,
so
Rajat.
much. I think great and very well covered. Both the funds have been very well covered. In fact, more than the fund, you talked about the economy, and I hope sessions like these are something which we have not done. So when you talk about international economies, countries, I hope this is very very useful.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.